Good day and welcome to the UTS Business School. It is 12 noon on 5 August 2021. My name is Gerhard Hambusch, and I'm excited to walk with you, the audience, through today's discussion on important developments in cryptocurrencies and decentralized finance. Provided the current pandemic and Sydney lockdown, we hope that all of you and your families are well and safe. Before we start, I'd like to ask Associate Dean External Engagement, Professor Prabhu Sivabalan, to welcome our guests and panelists.
Impressive group of panelists for our discussion today, and welcome everyone. I really hope you learn much and find our discussion to be of interest and enjoy it. First is Fred Sylvester. Fred, of course, is an award-winning digital marketer, a media commentator, a mentor, and active member of the startup community. Fred's, of course, the co-founder and director of finder.com.au, one of Australia's largest comparison websites. In addition, Fred is CEO of Sylvester Ventures, through which he empowers others to disrupt and innovate. Fred, it's a real pleasure to have you be a part of our panel and to hear your views. Really, many thanks for joining us today. Second is Alicia Vidler. Alicia joins our panel today with more than 20 years of experience in trading, investing, and finance at the international level. Alicia is founding member and chairperson of 100 Women in Finance in Australia. And previously, Alicia founded a London-based AI hedge fund. She has returned to Australia and continues exploring and researching AI and electronic markets. Alicia, thank you so much for joining us today. Very fortunately, we were able to reach out to venture capitalist and cryptocurrency investor Benjamin Chong, who some of you may have met at earlier UTS Business School events. Ben is an active technology startup community member in Australia, Southeast Asia, and the United States. And as an honorary associate of the UTS Business School, Ben continues to inspire our students and stakeholders by sharing his investment and entrepreneurial experiences, much as he is doing today. Ben, thank you again for joining us and for sharing your views in advance. Finally, last but not least, as the voice of academic expertise on today's panel, we have Professor Talis Putnams from the UTS Finance Department. Talis's main research interests include market microstructure, forensic finance, market manipulation, and insider trading. He regularly serves as a consultant and advisor to regulators, stock exchanges, and financial institutions in a number of countries. Talis is also a member of the Digital Finance CRC Advisory Committee. Talis, and I should say it's chief scientist. Talis, it's great to have you on the panel. And more generally, my sincere thanks again to all our panelists for giving up their valuable time to share their thoughts and views with all of us. Back to you, Gerhard.
Many thanks, Prabhu. And I want to jump right in. And Fred, I'm going to start with you since it took 2 years to get you here. I've watched a lot of videos about you, and you're doing a great job at sharing with the community what cryptocurrencies are. Maybe you could help us in a 30-second version, what are cryptocurrencies? Some of us may not know, and you may be able to shed some light on that.
Yeah, so thank you, and thanks for the opportunity. What an amazing opportunity, and thank you for all the esteemed panelists that feel solely dwarfed as the most least educated person on this call. So working as best I can to try and scratch my way up the education ladder. I think when it comes to cryptocurrencies, I think there is a fervent debate about what is cryptocurrencies, and it's currently happening right now at a government level as well, all around the world. And so I'm going to try and answer that as best I possibly can. So I think when I think about it, there's a separation. I'm just going to remove this blockchain idea. I think blockchain fundamentally, I'm just going to park that to the side. Blockchain, if you think about blockchain, is just like TCP/IP that powers the internet. So that's like a protocol that runs the internet, and no one really talks about TCP/IP anymore. We used to actually run on a different protocol between computers, but now we don't really talk about that. And so let's just park blockchain as well to the side, because let's just assume they run these cryptocurrencies. And so just specifically on cryptocurrencies, I think there are like currently you could potentially say there's 6,000 plus different coins out there doing all sorts of different things. And each of them have, and this is very controversial, but they have a purpose. Some don't, or are trying to get one. But most of the first cryptocurrency people tend to encounter is either Bitcoin or Ethereum. And really what they are, in some way, shape or form is, and if you go down to you talk about this technologically as well. I've actually coded a smart contract back in 2018 to build a token. Anyone can make a cryptocurrency. It's really whether or not it has any value. And that's the hardest thing, right? So each of these coins proposes to have some sort of value. You may be able to, for example, with Bitcoin, you own part of the 21 million Bitcoin. And so people would consider that potentially as a store of wealth. With Ethereum, you can use Ethereum's cryptocurrency to power smart contracts and, for example, exchange two coins. Or you may use it for trading fees in the case of Binance Coin. Or you might use it, a coin for powering or stabilizing and being equivalent to $1 US, which is a stable coin. And so there are many, many different use cases of cryptocurrencies. But each and every one of them probably has a fervent debate about its value. And that's why they are so volatile. I have some strong views on all sorts of different ones, but I'm just going to sort of try and stop there. Maybe that's my initial kick down field. I hope that helps.
Fantastic, Fred, for opening the discussion and putting the elephant onto the table. To be honest with you, 6,000 of these and a few of the terms you use still leave me a bit puzzled before I'm calling now my advisor and tell him or her to roll over my super into coins. I better wait maybe for another 55 minutes to do so. Thales, help us out as a researcher. Coins, Fred said tokens exist as well. And your activities as a researcher at UTS and also at the Digital Finance CRC in the future is about tokenization. Now we have another abuse of the word token again. Can you put that into context? Cryptocurrencies, tokens, and maybe related to decentralized finance, which is obviously in our headline?
I think Fred gave a fantastic overview of the different types of coins that are out there and their different purposes. I could add to that tokenization is really something that refers to taking some sort of a real asset that exists out there. It could be real estate, it could be a block of gold that's sitting in a vault somewhere, or it could be a piece of artwork or something, making a digital representation of it. So a token that effectively connects the ownership of that real asset. The holder of that token owns the real asset. So there's like a legal step in establishing that legal right to the real asset. Once you've tokenized it, that digital token can then be traded in many of the centralized and decentralized markets in which cryptocurrencies or coins are traded. So this is sort of another use case of the technology that underpins cryptocurrencies, including the blockchain, to not just create new coins and sort of new applications, but to take existing untraded, largely value add is when you take something that's untraded and make it tradable. So that has a few benefits. One is liquidity. Untraded things become liquid, and that can be beneficial for the holders of those things. You can also further diversification. So you can now have, say, fractional ownership of a real asset that may have been too big to prevent the sole owner from taking possession of it, which allows, again, further diversification portfolios. It allows us to break down geographic borders in capital flows. I mean, at the moment, Norwegian stocks are traded electronically on a stock market, but if you want to, from Australia, buy Norwegian stocks, good luck. It's going to be sort of a nightmare getting the infrastructure to help you take those positions, and vice versa. For a Norwegian to buy Australian stocks, forget it. So that's kind of some of the value that tokenization can bring. Then decentralized finance, what is it? So Fred mentioned perhaps two of the original and very popular cryptocurrencies, one being Bitcoin and one being Ethereum. Bitcoin really has sort of developed a role for itself, which is initially as a payment system, but once people realize that as a payment system, it's pretty clunky, then really a store of value. It's a way for people to, for example, as people used to store value in gold, they can now store value in Bitcoin if they so choose to, and transfer it digitally. Ethereum, on the other hand, isn't really a payment system, but rather it is a platform on which code can be written. So what you can do with smart contracts that are housed on the Ethereum blockchain is you can basically develop a little computer program and have it stored on the blockchain for people to interact with it. Now, if you can write a little computer program and set that free on the blockchain, you can basically take a lot of traditional financial services that are being offered with an intermediary like a bank, write effectively what that bank is doing in code, and then set it free in a smart contract and let people interact or consume that financial service, not via the bank, but via the smart contract that's sitting on the Ethereum blockchain. So lending and borrowing, for example, you cut out the middleman by just automating the process, putting it in code. Markets for trading assets, automate the process, put it in code, put it on the blockchain. Options contracts, futures contracts, basically everything that you can think of in the traditional financial sector, you can replicate on the blockchain in code, and you get benefits such as cutting out the middleman, disintermediation, you get efficiency gains from automation, and so forth. So that's the field of DeFi, or decentralized finance.
Fantastic, Thales, thank you. And I guess that the audience shares the impression here that cryptocurrencies and the understanding of them and technologies around them, and in the greater scheme, decentralized finance is more than some of us may have enjoyed in a small chat at a children's birthday party where one mother talks to another mother and convinces them to buy Bitcoin. It seems like this is a very complex matter, and I'm super excited that we have some experts here that are interested in these technologies and in these opportunities from different angles. So let's go one more time back to step one in finance, because you said payments, you said value storage. Is this thing an asset or is it not? And I probably want to engage Ben and Alicia here. And I start with Ben and then ask Alicia if the banks have figured out, who should deal with this, the FX desk or maybe the investment management group. Ben, but you have had an interest in cryptos, and you talked to the regulators here in Australia in early days. Can you give me an idea? Is this an asset that I'm now calling my advisor to buy, or is this a currency to pay Fred's new book with that we want to talk about?
Well, I would definitely say it is an asset. It can be a store of wealth because it is something that can be used for exchange. If you want to buy something in Bitcoin, you can certainly do so. And I can give you a real example of this. I'm fortunate to have an office on Bridge Street, on the corner of Bridge and George Street in Sydney. And opposite me, if I look over the road there's a convenience store. It's one of those 24-hour style convenience stores. Not too many people are going to it at 3 a.m. in the morning these days. But when I used to go there and pop in at lunchtime, in the corner of the back of this convenience store would be an ATM. And it's not any ATM, it's a Bitcoin-enabled ATM. And from time to time, I would see some people there with wads of cash, and they would be loading the ATM with cash. And I would suggest to you that they saw, and they still see, Bitcoin as some asset because they're feeding the cash in and then they're getting Bitcoin in exchange. And similarly, if you wanted to have Bitcoin that you could withdraw as cash, subject to all of the limits that Austrac and others put on these types of transactions, you can go to that ATM and exchange your Bitcoin for cash. So to answer your question in a sentence, is Bitcoin and other cryptocurrencies, can they be considered asset? I'd suggest the answer is yes.
Great, thank you, Ben. And Alicia, you've been working in international finance for many big investment houses in the past. You ran your own business. Can you tell me, it sounds now like there's an ATM. I know that Fred and Fred's Finder organization has an app that's advertised online. I looked it up last night. It has 2 cryptos that I can allegedly buy and store there. And the app looks nice. And my iPhone probably would enjoy having that thing on there, and I can probably start cryptoing a bit. I'm remaining to be careful because, Alicia, you tell me now, usually the banks would send me emails and knock on my doors, but there is no local bank currently that has knocked on my door and says, follow Fred and give me an app and buy crypto? So I'm a bit confused. Help me out.
That's a really good question. I think the first thing is it's definitely an asset. It's a store of value, but so is a painting. So what's the difference here? If we look at something that came out overnight, the SEC and Gary Gensler, who runs the SEC, has said they're intending to regulate cryptos. And they also point out that the value of crypto currently is $1.6 trillion approximately. That is bigger than the Australian GDP per year. So we're talking about a large amount of money. Now, conservatively, there's about $24 trillion of assets traded in a variety of exchanges around the world. So we're talking about 5 to 10% of the total securities of the world could be considered a cryptocurrency. Now, what we've all touched on is the fact that these tools, these fantastic abilities that we can use crypto and all the technology and all the infrastructure for, isn't that new. Yes, it's a new way of doing stuff, but we're not fundamentally doing anything different when we tokenize, etc. The real issue is this is not being done by one country or one government. It's a parallel system. And I think that's at the heart of why the banking world, per se, is not engaging well with crypto. Now, you touched on there is still some massive issues over, well, if they did engage, which division would control crypto? Would it be equities? Would it be bonds? Would it be currencies? It's not a simple answer. There's also the issue that the whole infrastructure is designed around sovereign control or country regulation. What we're fundamentally dealing with, which is a product that knows no boundaries, knows no country borders.
Yeah, I think that's a really good point that you bring up, Licia. And that, I would suggest, is one of the things that differentiates, at least in my mind, what, funny for me to use this term, a traditional cryptocurrency, where there is decentralized peer-to-peer control of the environment, and a centralized type currency, which we're all used to, fiat, Australian dollars, US dollars, or what you might hear, say, the Chinese are talking about with their digital yuan. The digital yuan is meant to be a replacement for their notes and their coins, their renminbi. It is not what I would consider a traditional decentralized currency.
Thank you, Ben and Alicia. So we've gone really now global with the phenomenon of what we're trying to discuss. You guys probably know at the UTS Business School, we foster positive social change and we empower students, to be a force for good in business and in finance in particular, here in the finance department. So let me come back to Fred and ask him, what is the good about crypto investing? I'd like to have us at least a positive note on this, given that it's a complex matter.
Yeah, so I think I think of this in several different ways. So the first thing is there are opportunities and different types of asset classes that exist in traditional finance that you can replicate in cryptocurrency. So you can go and buy digitized stocks today in crypto, and they have the similar asset value. If you don't want to go and purchase them through other brokerages, you can do the same thing. The other thing you can do with cryptocurrencies, you can earn yield. So unfortunately, banks have been paying us 0.2 to about 1% on our savings, which is not actually above inflation. And there are opportunities, particularly within decentralized finance, that will enable you to earn yield. And that's an incredible, wealth creation tool that I think is really important. Does have risks associated with it. So, this is cryptocurrency. It's not, there is no government. There is no bank that's going to sit behind this. You can also borrow money against your cryptocurrency. So you can actually use it as an asset, just like when you purchase a house, you can use it as a security, and you can actually collateralize your Bitcoin or other cryptocurrencies against it and borrow money. The other thing you can do is earn yield on your coins. So if you were to buy, let's say Bitcoin again, you can actually stake that and rent it out to someone. And in traditional finance, this is normally called margin lending. I'm sure this is it's an old practice, but it's actually been rebooted into cryptocurrency. I think if I was entering into this space, and this is not financial advice, but the way I approach it, I'll just tell my story, is I just bought a little bit of Bitcoin and just got used to it. And, you know, a lot of people, I just want to sort of comment on that. And this sort of gives you a little entry point. And that's really what the Finder app's about. It's that beginner stage. It sort of takes out a little of the complexity, and then you just get used to it because it's volatile. It moves a lot. And a lot of people sort of feel weird about that, you know, and uncomfortable, because the stock market only trades from 9:30 to 4:30. I don't know what the stockbrokers are doing from 4:30 until 9:30, but that's a nice life in my books. And you know, that's cryptocurrency trades 24/7, 36, you know, 365 days a year. And it's also global. So the reason why it's so volatile is you've got every single person on the world trading it non-stop, whereas the stock market just stops. And that's why it feels very unvolatile. And what I'd say about this is, you know, and I read a lot of investing books of recent, and I've been obviously an investor over time, and I'm probably nowhere near as good an investor as Ben, but you know, or Alicia, but I'm trying my best. You know, but there are some fundamentals I think that I've, you know, developed and learned about cryptocurrency investing and how that kind of works. The first thing on volatility I think is really important is, if I came to you every day and you know, say you owned a house and I came to you and I knocked on your door and I told you the price I'd be willing to pay you for your house every day, knocked on your door. So I'm going to pay you $1,005,000. Then tomorrow morning I come in and I say, I'm going to pay you $1,006,000. And the next morning I come in and I say, I'm going to pay you $1,003,000. You'd think I'm mildly borderline schizophrenic, because one day I've come in and told you one price and the next day I told you a completely different price. Now, if I did that every second of the day, you'd be borderline scared. And the thing is, your actual house price is moving around like that. The only issue is you're just not getting bids and offers continuously. That's exactly right, Elliot. I'm ruthlessly stealing from Warren Buffett, aka, and also Ben Graham. And I actually have the Intelligent Investor on my desk as well, if anyone wants. This is an intense book, but it is your Warren Buffett beginning point. I'd suggest chapters 8 and 20, particularly chapter 8 on market volatility. So the way I look at this is, if you're going to get into Bitcoin, and this is not financial advice, but if you bought every single all-time high, apart from the most previous one, you would be up. That's the straight chat. Bitcoin is a deflationary asset. It's a store of value, and there's only ever going to be 21 million of them. And you've got to believe that thesis. And if you do believe that thesis, and it's played out so far, it doesn't really matter exactly when you buy it. Obviously, if you can buy it on the lows and when people are really, really scared, that's great. But don't sell your Bitcoin. That's the straight chat. Don't sell it. You can if you want, but I don't get sucked into the speculation of price and if it's too high or if it's too low and all those kinds of things. All of that stuff is that's not investing, that's speculating. And you may as well go and put your money on, you know, Pinky Blue number 8 at Randwick. If you want to go and do that, you have just as much chance. You're guaranteed to lose your money if you speculate. And so that's the way I view it. You know, we're launching recurring buys, so what's called dollar cost averaging, where you just buy every week in the Finder app. You don't know when you're going to buy, and over the long haul, you accumulate the asset. And that is really a very strong way of investing in cryptocurrency. It's very hard to pick the bottoms and pick the highs. I know extremely strong traders with all sorts of technical analysis and fancy things, half of which I don't understand. But our approach in Finder, you know, we allow people to get paid in cryptocurrency, 25% of their salary. We also get paid as a business in cryptocurrency. And the way we approach this is we just buy and we hold and we continue to accumulate over time. And that's served us well. I think in the other sense, it would be a great idea if I was beginning, and forgive me, I don't know, Gerhard, if everyone is super advanced investors here or not. I could be wrong on that, but I'm guessing that we're sort of got a mixed bag, I'm hoping, is I would use a centralized finance tool to earn some yield. So if you were to buy some Bitcoin and then deposit that into somewhere and earn, 4% interest on your Bitcoin and just get used to that experience of earning yield. I think that's a critical idea, right? The centralized idea, I think, of Warren Buffett really and Charlie Munger is they essentially just took all their money and never spent a single cent, or as little as they possibly could, and compounded it over a very long period of time. And so getting high interest rates and getting any form of interest and compounding that, I believe Albert Einstein said it's the 8th wonder of the world or whatever it is. Forgive me on my quotation on that, but it's probably ruthlessly. I don't think he actually ever said that as well. Let's actually Google that. But regardless, that's essentially the principle. You want to compound your earnings and compound them over a long period of time. And I strongly encourage to consider and look into centralized finance, and then consider, some relatively, I'd say, low-hanging places of decentralized finance to get slightly higher yields. I have some areas of those. It may be good to start with, say, Uniswap or Aave, or really strong, old, or relatively old, but stable smart contracts. I personally, and this is for the advanced one, I'm just going to throw this out there. I'm very big into Terra Money and the Anchor protocol, and I don't know if that's to the advanced user out there. I think what they're doing with Doquan, and essentially they've got a system where they've got a stable coin of US dollars, they're earning yield and allowing you to borrow, and they've also got a whole ecosystem of stocks that you can speculate on, and you can take all sorts of positions in that market. That was probably a very broad spectrum of things. I hope, Gerhard, I hope that helps everyone build on those ideas.
Fred, thank you very much. That was great, and certainly adds to the complexity. So my phone and my super fund are still a bit away from crypto, but I get what I liked is you said getting used to it. If it's something new that hangs around, we want to talk about that. Let me ask Thales, and I'm sharing the screen of just a screenshot of the time series of Bitcoin, and there's an Aussie dollar on the y-axis and the time series on the x-axis here at the bottom. So we have from just before 15 all the way to today. We kind of see what roller coaster, or say ups and downs, BTC has undertaken. And then year to date, since the beginning of the year, we've seen significant movements in there. So maybe, Thales, I can continue with you. We talked about Bitcoin investing. You've done research on other investor behavior, including people that are locked up and using the stock markets as casinos. I trust cryptocurrency investing is perhaps part of that. Can you comment on this too, the risks and probably rewards and the future of investing in cryptos?
Sure. The point that you just touched on towards the end, that when lockdowns occurred as a result of COVID, there was a frenzy of activity in stock markets, and it was largely people opening up retail brokerage accounts or reactivating inactive retail brokerage accounts, and subsequently we saw very interesting behavior in some segments of the market, in particular very speculative stocks, near bankrupt stocks, stocks like GameStop, et cetera, et cetera. So there was a flurry of sort of gambling-like activity in traditional stock markets, fueled by lockdowns, but also cheap brokerage or zero brokerage costs. In cryptocurrencies, we also see a considerable segment of retail speculation, people that are buying and selling, holding for short periods, taking leveraged positions. And I think one of the things that actually attracts the type of speculative behavior is the fact that there is a lot of volatility to trade there. So people that are out there for a gamble, looking for a bit of adventure in a financial market, not necessarily taking a sort of a long run buy and hold sort of sensible investment approach, but looking sort of to trade volatility, for them, a market that's stable is boring. There's nothing to be made, there's nothing to be lost. So volatility is one thing that actually attracts a lot of speculators to Bitcoin or other cryptocurrencies as well. There's also a lot of leverage opportunities in cryptocurrencies. Sometimes sort of irresponsibly high levels of leverage that can absolutely destroy traders. So people are able to get 100 times leverage on their investment, where just a tiny downturn in that particular cryptocurrency and they basically get wiped out. They've got 100% loss. And there's some people that don't understand those risks and are playing with extreme levels of leverage and getting wiped out, perhaps even borrowing money from others and getting themselves into all sorts of difficulties. Now, the volatility of cryptocurrencies, one of the drivers is, I guess, as Fred suggested, that there's a lot of sort of trading activity in the assets trading a lot of the time. And when speculators are pouring money in and out, that creates volatility that's unrelated to fundamentals. But another driver is actually that the fundamentals of cryptocurrencies are much more complicated to try and understand than a traditional stock. We're used to pricing traditional stocks by having a look at the cash flows of the company, figuring out how much I'm willing to pay as a multiple on those cash flows, or discounting them back to the present, summing them together, and there's your valuation. In cryptocurrencies, it's difficult sometimes to even think about what is the value of one of these cryptocurrencies, depending on what the cryptocurrency is trying to do. And so the more uncertainty you have around valuations, the more volatility gets created as well. So I think that's another sort of important driver. Two things that we're seeing in response to the volatility in cryptocurrencies. One is the emergence of hedging services. So there's new protocols being developed at the moment that'll give you downside protection on cryptocurrency positions. And the way that they're offering that downside protection is through innovative hedging mechanisms, as opposed to, say, some of the traditional mechanisms that exist out there in financial markets, like stop loss orders or options, etc. So that's an insurance contracts. There's all sorts of innovations to deal with the volatility itself emerging. But the second thing that's emerging is stable coins. And what a stable coin is it's a token or a cryptocurrency that aims to get rid of the volatility. It aims to peg the value or the price of that particular coin or token to some other stable asset or reference asset. Often it's a fiat currency. So there's a lot of stable coins that are pegged to the US dollar, for example. And those may sound a little bit boring because, I mean, what is it doing? It's just basically giving you a digital version of the US dollar, but they're actually huge by market capitalization and trading volumes, because they're a very important part of the decentralized finance ecosystem for those that want to use cryptocurrencies for transactional purposes, but cannot stomach the volatility that comes with cryptocurrencies.
Fantastic. Thank you, Talis. And maybe I can ask Ben as well. Ben, you're a private equity participant, a venture capitalist. My understanding from my own internships 100 years ago is that those people, look at cash flow statements and buy the opportunity of growth. And therefore you have a brick and mortar business of some sort, at least in the old world. And you grow it and you sell it off, and that's your business. Now, as a VC, you said to me, you have engaged with cryptos. You were excited about cryptos, perhaps as an asset. Tell me what a VC thinks about, this as an asset class to engage with, given that your upbringing is more of a buying businesses and selling businesses. Can you comment on that, Ben?
Yeah, what I'd say is, as a VC, we like to find technologies that perhaps are nascent and that have a large market over time. And we're about backing those technologies along with the founders of those technologies and the market opportunity. So it's technology, business model, market opportunity. When it comes to crypto, that has been something that we've observed quite closely. We've seen a number of business plans and decks of founders who have been wanting to raise money, but so far we have not made investments into businesses that have been in and around crypto. As a fund, we traditionally would not invest in crypto per se, because our investors in turn want to have exposure to businesses. But I am aware and am friends with a number of VCs who have specifically decided to focus their investments around businesses that are in the world of cryptocurrency. So whether it's an exchange, whether it is a business that makes use or is able to leverage smart contracts, or whether it is a business that offers a bunch of the services that Fred and Talis were talking about. So I know that there are a bunch of these venture funds that specifically want to give their investors exposure to the growing amount of activity and therefore businesses and value that can be created by providing these services around decentralized finance.
Fantastic, Ben. Thank you. And maybe I can ask Alicia. I know, Alicia, your camera is off, but I'm sure you're still on. You are what I call a rocket scientist. You're a math-trained finance expert. Can you tell me in investment, since we have now a few views of people that have put their money where their mouth is, that is, they've invested and showed us their philosophies, and Talis has put a bit of background to maybe the risks involved as well. Can you tell me from your view, is crypto investing also a data-driven computers trading game, or is this, like Fred says, relating to old school investing, buying and going to sleep and wake up and you're rich, hopefully?
I think it's something in between, to be honest. And I think we're missing a couple of key components. We think about fundamentally what's the value of an asset. It's either what you can buy it for and then sell off its various components, much like Fred's point about a variety of ways of getting margin, etc. Or it's simply the price that someone else will pay for it. Now, yes, stable coins are a slightly different example, but I think if we talk about the volatility that came from something like GameStop, we're forgetting something really crucial here, that the adoption of crypto by people generally considered to be millennials is extremely high. And I think what we're seeing also is just a shift across finance as to how that general age group, of which some of us are or are not or very close to, actually value things. And so data is always very important. But as Fred sort of mentioned, when you think about, well, I've just got to be invested and I go to sleep and I wake up and it's just there, that's generally considered central limit theorem territory and a thing called momentum trading, which is you can't pick timing, you have to be involved. And that's definitely one way of thinking about it. But I think we've got a different issue here. This industry, this asset class, and it is an asset class, has come out of nowhere and now makes up 5 to 10% of securities, if you want to call them that, which I think they are, globally. And that means a lot of people have put a lot of faith into these protocols, this product, this asset class. I actually think it's got a lot more analysis or a lot more similarities to things like the antiques market or the art market, the fine wine market. These are all assets. They're all stores of value. They're all very much appreciated by their purchasers. But quite crucially, differently, it's now open to a lot more people because of technology. And that's a wonderful thing.
Fantastic. Thank you, Alicia. Allow me to bring 2 Q&A questions in. Maybe I could ask one to Fred. Someone says, there's so many coins out there. I read his question or their question out. What would incentivize someone to invest in one crypto compared to another? That's, I think, a great question. And maybe a question for Thales after that. Will higher nominal and real interest rates in the non-crypto world destroy the attraction of cryptos and tokens, given these alternative streams of income that Fred's also mentioned? Fred, I start with you. In the coin zoo, where to go? Is that a diversified game? And once again, this is not financial advice.
Yeah,
we're exploring.
So I just decline that. Alicia, I'm going to take an opposite position just because I think it's debate is where it's at. Is that I don't think this is a piece of art because you can't power a smart contract with a piece of art, and you can't exchange and do all sorts of things and stake them. And there are things you can do with art, and I understand there are some coins that are literally representations of art, and there are NFTs and things like that. But there are, if you look at the internet itself, so hosting providers, in other words, they get paid a rent for providing hosting, and Ethereum is in a similar, sort of construct. I think there are actual use cases and usages that will continue to drive these places. And I think the way in which you want to look at this, like zooming out, is you need to believe in ecosystems. So ecosystems are what would essentially, just to go back in time, I'll give you an example. So there used to be 2 different types. I don't know if everyone knows this, but there used to be 2 different types of video recorder. One was Betamax and the other one was VHS. And actually Betamax is better, just everyone FYI. But no one's got Betamaxes anymore. They actually were better in terms of what they did. And what's happening right now is that you've got this huge amount of bifurcation of the similar types of technologies, and everyone's trying to figure out which one is the one that's going to win. And if you go back in time as well, the same thing happened with car manufacturing in America. I think there are over like 140, or even more, like 1,000 different car companies, manufacturers in America at one point in time. Like everyone was making cars, just like everyone was making frozen yogurt just before. And everyone was, everyone gets into it and they all have their different flavors. That's what's happening in cryptocurrency right now, is that you've got a Cambrian explosion of technology and platforms trying to figure out which are the ones that are actually going to survive and which ones are going to continue on. Now, if you're going to do some reading after this, my suggestion, it's a breakout topic, would to have a look at the Lindy effect. The Lindy effect is something which it's this idea that if a piece of technology has been around, say for a period of time, it's probably going to last again at least half more that lifetime it continues on. So if you think about the fork is pretty prodigious in its usage, and you're pretty sure as a technology, it's going to carry on. Just like the computer and the way in which it's constructed, with its microprocessor, its RAM, and its hard disk, that idea, is from John von Neumann, and a mathematician, a great mathematician as well. And putting those pieces together, we don't, that technology is probably going to continue on for a while longer. Now, when you look at other coins and other smart contracts, I think you've got to do the same thing. If you look at Bitcoin, the longer Bitcoin grows in time and hasn't been hacked, continues to survive, it balances out its difficulty with its mining and things like that. The longer it continues on, it gets stronger and stronger Lindy effect. And the same thing is happening with Ethereum. It's becoming older and stronger and becoming, even more stable over time in terms of its reliability. Yes, it had a problem with its DAO in the beginning, but apart from that, its stability, its security, and its ongoing growth, you can sort of bank on it to some extent. Now, these are all very new things, and any piece of technology like this takes way longer to be to that level. But the way I sort of look at these different coins is I look for that ecosystem. I look for that stability, and I look for the ongoing use cases of what will this be used for. There are many cryptocurrencies that are out there that are like a hammer looking for a nail, I describe it. They solve a problem, but no one has that problem. And there's lots of those that are out there, and that's where you can lose money, right? Whereas, Bitcoin has now got futures markets attached to it. The Chicago Mutual Exchange, which is one of the most, I'd say, well, if not the most respected futures market, has a Bitcoin market. That's a significant step in terms of a particular coin going from, I just don't think it's a piece of art anymore. That's another level of financial instrument that can be traded and looked at over, very significant markets. I think that your point, Alicia, on the flip side in terms of art, yes, some of these very speculative ones are literally like, who knows what that's used for and what's that going to be in the future. When I look at these things, I go and join the communities. I join the Discord channels. I talk to the people. I listen to the founders. I watch their YouTubes. You can actually ask them questions. The next step I try to do is you actually go look at the technology, try the product, use it. Really just execute some contracts, put $100 in and just see how it works. And if you feel, this is just the way I look at these, if you feel that that's going to work for you and that's got a purpose in the future and you think there's a long-term use case for this, it's probably that's going to be a long-term investment. It's going to be something that people are going to use for a long period of time. And you can see that. That's another great sign when I look at these things. If you want to go down to the technology, like all of these things are open source, you can go into that level. I personally have tried that, and I'm relatively technical. You might need to refer and ask some other people if you're not that technical, but it is possible to read audits and read analyses of these things because they're all publicly available and you can go and dig into that. What I would look at, and what is another great sign, is you can actually see the GitHub. So the GitHubs are where all the code's stored. And you can see the number of times that the actual code is updated. Now, if you look at some projects, they're not being updated at all. Like Litecoin and Dogecoin to a large extent, they're actually not being touched very much at all. So that's not a good sign in terms of a technical project. Whereas Ethereum, even Bitcoin's got a new change that's coming out fairly soon to its actual code. It's got developers working on it. And those ecosystems go together to make and drive this technology forward. Another great sign of a good cryptocurrency. And then I think, a lot of this is probably my speculation, and Ben, you probably got much better ideas than me, but I look for some sort of visionary or some sort of person who's driving it. Now, unfortunately, in humanity, we love this idea of purely, decentralized and the whole, common good. Unfortunately, we as a human are structured into hierarchies, and we tend to work really well under those circumstances, whether we like it or not. And that's very controversial to say, but I believe we evolved from lobsters, and that's the way we structure our societies. And you need a leader, whether that's obviously not saying an authoritarian, but someone needs to drive this forward. You need somewhere to go. Otherwise, you just got a rabble of all sorts of things and not going anywhere. So you look at Ethereum, it's got Vitalik, it's got some other really great strong leaders inside it. Do Kwon behind Terra Money. You've got Adam Beck in Bitcoin in terms of them, what they're driving with Lightning and the kind of things they're building. There are some really strong leaders that are out there And they provide a vision, they provide a direction. And I think that's another great sign of an area to invest within. I just want to make a final note on, if I can, Gerhard, I'm sorry, this is probably a small riff, but I just want to societally talk about this. I have this thesis that cryptocurrency is one of the greatest things that can actually happen to our society, because now finally, as the everyday person can have access to something that does have great volatility. We've democratized volatility. Previously, there was nothing that nowhere near as anything as volatile that we could get such high returns from. It was just not accessible. Investment bankers had access to these things. There were all sorts of contracts and advanced margin and all this kind of stuff that they could go and leverage and go towards, but it was not actually possible. Whereas this, yes, it does create the possibility for loss, but also creates the possibility for people to make and create wealth that was not democratized before. I think that's actually a really good positive thing, as long as it's used and seen in that way, where you should just sign a small portion of money, don't go all in on something like this. But I think that's a breakthrough. And I think societally, it's actually something that will help to spread wealth and to a wider portion of people around the world. The other thing I think it does is that young people, and there are better ones that look like, so some of the crew in my team, they've learned technical analysis on markets, technical analysis. So they know how the charts work, and they're looking at Fibonacci's, and they're telling me what's going to happen. They're studying these markets. They're understanding these markets. And I think if you learn cryptocurrency educationally, I think it's a massive contribution to society. And what it does is we're going to have a generation of more financially literate people. And I think that's a great thing for our society. There's a little small riff there on the side.
Many thanks, Fred. I like you pointing out the visionaries, and you're pointing to the dynamite that now allows me to explode to pure wealth. I'm still hesitant to pick up my phone, but Benjamin, allow me to ask you, entrepreneurial opportunities like these visionaries that Fred mentioned, is that making sense from your point of view? I mean, obviously this discussion is not only about coins, this is about everything around it as well, and the opportunities that come out of this. Is this a big field in the world where people like you and Fred chase people that have visions to back them with money and let that grow? And what kind of things come to your mind?
Look, I'd say as a venture capitalist, we do back founders, and founders tend to have vision. And I would agree with the comment that if an ecosystem or a sub-ecosystem is going to grow, it does require one or more people with a vision to bring people along with them for the ride. So where there is a lack of vision, where there is a lack of perhaps an explanation of what the future might look like, or how a product or a service can be used, well, it is likely to languish. And I would encourage people to read, to see what activity is occurring. And I'd also suggest, if this does interest you, go and buy a fractional Bitcoin. Monitor the price, understand how it works. In the same way, if you're interested in listed equities, you can buy a marketable parcel of BHP shares, and you can monitor what happens intraday, intra-week, intra-month. It's one of those things where you have the opportunity to give it a go with an amount of money that is small enough for you to risk, but also perhaps enough for you to pay attention to as you learn and experience it through practical knowledge.
Thank you, Ben. And that goes hand in hand with what Fred said. Get exposure to a small extent, to learn with it, to get the experience, and to be able to judge it. Talis, we have lots of questions in the chat that we probably don't get to all, but we have to talk about this DeFi versus centralized finance, and also, therefore, the future of coins in general. Can you give us a bit of an idea? I read a paper last night from people that have co-authored with you before research. They looked at decentralized exchanges, DEXs, and centralized exchanges, SEXs. And they basically said when a coin jumps from a decentralized place to a centralized place, its volume ramps up by a factor 70x. And so there seems to be a preference of people to deal in centralized markets, given perhaps the protection that comes with it or transparency. I'm not quite sure. You will explain that to us. But decentralized finance is obviously on the rise. Will these be parallel systems? Will one beat the other? And Alicia, probably you can chime in there after Talis, because you have worked in the centralized world for sure.
Yeah, I mean, that's a good question about how this space is going to play out with this sort of tension between the traditional, fairly centralized system and sort of the new innovations that are happening in this decentralized world, especially in DeFi. I mean, one of the ways I see this thing potentially playing out is, given that there's very interesting efficiency gains in decentralized finance, where some of the traditional services that are of value, financial services, and also services beyond finance, by the way, are being basically automated, put into code, cutting out the middleman, cutting out the fat, cutting out the wastage, peer-to-peer. There's also interesting new market types in that space that have innovated in market design. And actually some of those market types, actually, they have some teething issues. They have some problems to sort out. Like, for example, automated market makers aren't completely smooth sailing. But there's a lot of promise in these new market types. So one of the ways I see this potentially playing out is having a lot of the back-end infrastructure of lending and borrowing, markets, derivatives, futures, options, actually in smart contracts in a decentralized finance world, but then the centralized players plugging into them. So take, for example, lending and borrowing. Currently, banks have both sides of that trade. They have the lender and they borrowing and they intermediate and they take a clip in the middle, but they have a lot of overheads, right? Assessing borrow quality, monitoring the contract, dealing with collateral, marketing costs, etc. There's big lending and borrowing markets developing in DeFi that cut out a lot of the wastage. Banks are feeling a bit of the pressure. Why not have banks competing to write front-end user experience sort of interfaces that plug into the decentralized lending and borrowing markets that are happening in smart contracts? Then you get competition on the user experience, but the actual infrastructure that underpins it is decentralized and efficient with a lot of those processes automated. So that's one potential sort of model that could play out in the future, where these things, the centralized and decentralized systems, go hand in hand. Same with, say, decentralized markets. You have these markets being built on chain, on a blockchain in a smart contract, but they're technically difficult to access. But you can make them easy to access by having centralized points at which people can interact with them. And so that's, again, it's a mix of centralization and decentralization. The underlying infrastructure is decentralized, but then you've got central counterparties competing to give access to the decentralized services that are running efficiently in the background. There was this related question about, will higher interest rates kill off this all this action in tokens and cryptocurrencies? And I think the answer to that is no, given that there's sort of three main types of investor activity that we're seeing in this space. One is you've got the speculators that are trading volatile assets just for the sake of getting the volatility, that those assets themselves may have no fundamental sort of cash flows coming in. Then you've got equity-like investors that are looking to take stakes in promising projects where they value from that, where they gain if that project becomes valuable. And then you've got yield farmers that are depositing money in staking pools in decentralized finance protocols, hoping to earn something equivalent to an interest rate. And at the moment, that's a very interesting segment because, as Fred was indicating, the yields that are available there are much higher than what banks are paying, which is pretty close to zero these days. Now, as the yields go up in banks, will that kill off the yield farming industry in DeFi? I think not. And the reason is that where those yields come from in DeFi is from efficiency gains that that traditional banks, where the money is being effectively not efficiently utilized. That allows in DeFi the yields to always remain higher than you would get in the traditional financial sector. Another factor is that you've got higher risk at the moment, at least in yield farming in DeFi. Your contracts can get hacked. There's no government agency that's going to bail you out if you make a ton of losses by staking in a DeFi pool. And because risk and return go hand in hand, the yields are likely to remain high or higher than the traditional sector interest rates that you see in banks.
No, look, I think that the question around the centralized banking system is really important to echo everyone's comments on this panel. The centralized banking system has to engage with assets such as cryptocurrency, and they're not, frankly, at the moment. They are trying to through decentralization, but I think the real question is how can you have a firm such as something like Afterpay worth $39 billion running a product that is effectively the same thing that most credit card divisions of large Australian banks could have turned around very quickly and easily within their own structure, but they didn't. And that's the key point. They didn't. They didn't spend a relatively small amount of money to take on a very, very, very large opportunity. And these opportunities, Afterpay, Robinhood, Wise, Square, just to name a handful of them in the press in the last couple of weeks, are worth 30, 40, $50 billion companies. This is indicative of the problem with the centralized system. And I fear, actually, that if they don't engage, they will become less and less relevant. And I think what crypto has taught me as a banker with 20-odd years experience is there's an age group and there's a group of people who want something different and will build it and create it. And that's fabulous. There are a lot of issues. And I do believe that socializing volatility, which means socializing risk, is something that a lot of people don't fully appreciate and understand. And I take Fred's point about, everyone should have the opportunity of volatility, but with a lot of volatility comes a large degree of risk, and there needs to be regulators engaging more than they are. I think the bigger question is, if the centralized system has refused to engage with such huge market opportunities like buy now, pay later, etc., do we think they're going to engage with something like crypto? And I'm not sure of the answer of that one.
Thank you, Alicia. I think that's probably a very good ending note. It sounds like we haven't finished the discussion at all. There's plenty of things we wanted to talk about and that we need to talk about, including, for example, the dark side of such technologies without making it darker than it is. But obviously, these technologies perhaps enable those that do not do right to operate better. Talis has done some research on that. We could talk more about regulators and the threats or opportunities. And Alicia, you pointed out that we probably need some more engagement there. Unfortunately, we ran out of time, and I'm mindful of your time. I would like to make sure that I thank you, the audience, for having attended today. I assume that you found this interesting, hopefully engaging. I certainly learned a lot. I'm still away from my telephone, Fred, to call in, but maybe I'm having a look at your app or other apps to get the experience. I much like that. I certainly thank everybody on board here, starting with Fred Chebesta, who represented his views. And of course, as a founder of Finder.com, is a well-known person in Australia. So we enjoyed learning from you, Fred. Alicia, thank you very much for allowing us to learn from your experience as well. Benjamin Chong, the entrepreneurial view is important. I think many of our students are interested in how to build a good business, and you and Fred both have contributed to that view. And Talis, as a voice of science, I call you that way. I thank you for your time as well. Once again, thanks to everybody in the audience. We see you soon again, and I trust we will have a crypto event again, likely perhaps later this year or early next year, but thank you for this. All have a good day, and I will see you soon.